Have you ever wondered why some people make it look so easy when they get approved for a mortgage, while others hit wall after wall, losing money, time, and sometimes even their dream home in the process? Well, the truth is, it often comes down to a few avoidable mistakes. And if you're planning on buying a home in the future, I'm going to walk you through the most common mistakes people make and how to avoid them. Welcome to the channel. My name is Blake Oliwell, owner of the Bravo Ridge Group. We meet people every day that tell us how a simple mistake cost them their home that they wanted after months of searching. Can you imagine that? Months of taking off work to go look at homes, putting in offers that get rejected, to finally get one locked in, only to have it all fall apart. That's where this video comes in. Let's get started. First, we have to cover the most essential topic, budgeting. This part gets overlooked far too often. Long before you sit down with a lender or even think about pulling your credit, you need to have a real plan for your savings. I'm not talking about throwing a few bucks into a savings account when you remember to. I mean sitting down, looking at your monthly income, your expenses, and identifying exactly how much you can consistently put aside for your future home. A lot of people wait until the last minute to think about this when they're speaking with their lender or suddenly realize they don't have enough saved, not just for the down payment, but for the closing costs, the moving expenses, and the unexpected stuff like inspections, appraisal gaps, or even repairs that need to be made. Instead, I always recommend starting this process 6 to 12 months in advance if you can. Budgeting early gives you breathing room. You'll feel confident, not panicked. And when it finally comes time to get pre-approved and start shopping, you'll be ready to go. Number 2, not checking your credit early enough. Next is one of the biggest blind spots, your credit. You'd be shocked how many buyers wait until they're ready to make an offer before checking their credit score. You want to check your credit months in advance, because if there's a mistake or something needs to be fixed, like a medical bill that slipped through the cracks, you need time to address it. Even just a few points can make a huge difference in your interest rate. If you're in Iowa, especially here around Des Moines, where homes are still moving, you need every edge you can get. Now, before we cover the biggest mistake that causes people to lose their dream home all the time, I ask that you like the video and subscribe to the channel. It is completely free and tells YouTube to push our videos to more people that can use our help. Number 3, making big financial moves right before applying for the loan. Making large purchases or opening new credit accounts right before the loan is closed is another common mistake we see all the time. I get it. You were excited. You found your future home and you're picturing that perfect furniture set, but don't apply for financing at the furniture store or touch that credit card. Lenders are watching your debt to income ratio like a hawk. Even financing a washer and dryer could throw off your loan approval. So what's the best move? Wait until after closing to make any major financial decisions. Trust me, it's worth the wait. Number 4, not getting pre-approved early enough. There's pre-qualified and then there's pre-approved. And yes, they are very different. A pre-qualification is just a rough estimate, but a pre-approval is a full financial review that shows sellers you're serious. This involves giving the lender your tax returns, pay stubs, even bank statements. They will do a full review of your finances and ask many questions about your income, large deposits, or purchases that you may have had recently. Especially in hot markets, you won't even get your foot in the door without a pre-approval letter. No matter what state you're in, I can connect you with a trustworthy lender who will walk you through this entire process. So please feel free to reach out to me anytime. Number 5, assuming you need 20% down. This one hurts a lot of would-be homeowners. People are still under the impression that you need a full 20% down payment to buy a home. And while that might help you avoid private mortgage insurance, it's absolutely not a requirement. There are FHA loans with just 3.5% down, conventional loans as low as 3% down, and VA loans for veterans with 0% down. Iowa also offers down payment assistance programs, some that even help with closing costs. If you're renting and thinking about buying, don't let that old 20% myth hold you back. Let's have a conversation about what's really possible for you. Number 6, ignoring additional costs of buying. A lot of people go into the mortgage process thinking about only their down payment and that monthly mortgage. But the truth is, there's a lot more to it. You'll need to budget for your closing costs, home inspections, appraisals, property taxes, and homeowners insurance. Some of those are negotiable, but unfortunately, most aren't. That's why I always recommend clients plan an additional 2 to 5% for these just in case, so there are no surprises. Number 7, changing jobs or income during the process. Another big mistake that I see far too often is changing jobs right before or even during the mortgage approval process. Now I get it, sometimes these opportunities come out of nowhere, but switching from a salaried role to commission-based or self-employed can completely stall or even kill your mortgage approval. Always Talk with your lender before making a job change, even if it's a promotion. Remember, your realtor and lender are part of your team to help you with the home buying process. In this case, it's better to close first and make changes later. Number 8, skipping the pre-approval because of online calculators. Online mortgage calculators are great for ballpark estimates, but they can't tell you how your unique financial situation will be viewed by a lender. Things like your credit history, the debts you have like a car or student loan, assets like rental properties or retirement accounts, and even your location matter. Relying on online estimates without a real pre-approval is like guessing how much a plane ticket would cost without ever checking the airline. Get with a lender that you trust to run the numbers together the right way and save you from surprises later. If you need help with this one, I can help you find a lender that will take care of you. Buying a home, especially your first one, can be a multi-step, troublesome process, but avoiding these common mortgage mistakes can make all the difference in getting the keys to your new home without the stress. If you or anyone you know is looking to buy or sell a home in the future, I'd love to be a resource for you. And remember, there's no such thing as a silly question when it comes to something as important as your home. Thank you so much for watching, and I'll see you in the next video.